It looks like we're getting close. We're at the $1 mark to get to 36 strike. And so let's go ahead and see if it happens right now. If it does, I'm probably going to give it like another, probably till noon. If it hits early right now, I'm going to give it to at least noon to see if it has a settled new price because it might go to 40. But after, if it's noon and it's still like hovering around 36 and it actually hit 36 already, then I'm definitely going to close it out and move it over to GME and AMC. So let's see what happens.
Well, this year is quickly becoming the year of the Special Purpose Acquisition Company, the SPAC. The new data from Goldman Sachs showing 175 of these blank check companies have raised $56 billion this year alone, and it's only March 2nd. It's an average of $1.5 billion per trading day. Now, one of the latest companies to take this route is Complex, a risk analytics platform, which is merging with a blank check company founded by the CEO of Casper. The deal values the company at nearly $1.5 billion. Counts Bill Foley as the lead investor on their past funding as well. Joining us now is Jason Crabtree, CEO of Complex, and Bill Foley, serial SPAC dealmaker, chairman of Can Holdings, investments in software, mortgage analytics, companies, sports teams, and more. It's a real pleasure to have you both on right now. And by the way, I've got something special to show you at the end. You're both West Point guys. Jason, let's start with you. Okay, cybersecurity, SolarWinds hack. The more we learn about it, the more terrifying it is. Literally, bad guys in the systems for months, undetected. How much interest are you seeing in cybersecurity right now?
Yeah, I think when you look at Complex is one of the most advanced companies in the world at lateral movement and privilege escalation, and that's actually the centerpiece of the story at SolarWinds, was attacks against Active Directory that aren't detected by traditional security solutions. And we do this for some of the world's largest companies, and we're very excited as part of this transaction to not just do it in the corporate world, but also to be able to do it back in the government and national security space.
Yeah, looking at some of your product portfolio, Jason, I also saw finance, and I'm thinking to myself, are you trying to kind of go after a little piece of the Bloomberg empire as far as their computer terminal?
Well, I think when you think about the future of risk,
Well,
everyone wants to understand how risk and
it's
data
right there, huh? This was I bought the deepest out of the money option you could find, earliest expiration. So like nobody made better ROI than this right here, so that's pretty cool. But I'm gonna hold this till just before noon, and then if it goes to 40, I'll price out 40. But if it doesn't go to 40, then I will close at noon. Yeah, that's a good win though. It's pretty gangster. In the money, boom. The TV's pushing this one hard as F right now, and this is the only one that's going up with AMC and GME. So I feel like this is like the government brand of what's happening in AMC and GME. So I don't feel like I just don't got good vibes about it. So I just want to take what I can get and then send it on over to GME and AMC because I know they're the right places to be. I don't know what's going on. I like the rocket emoji. Like when I was thinking about the rocket emoji and Rocket Mortgage Company, like it, I don't know, I was liking it. But now the TV's pushing it too hard. So you got to know it's not going to last forever, right? We'll see.
they obviously have plenty of work to do, but the SPAC is really an alternative to the IPO process. The IPO process is long and drawn out. We took Dun& Bradstreet public last summer. We worked on that transaction for about eight and a half months, and then by the time you're done, at the end of the day, you're subject to the vagaries of the market. Is the market going to accept an IPO at that time? Whereas the SPAC transaction, you raise the money, it goes into trust, you find a company that you're interested in acquiring, and you then close that transaction. And it's much more abbreviated, and also it's a way for a financial sponsor or for a corporation to monetize their investment fully or partially. And in our case, as a PaySafe and a Life, is partial monetization by Blackstone, but they're still our partners going forward. So it's just a simple way to execute a public markets transaction.
But I guess what I'm trying to understand, Bill, is these kind of came out of the blue. I mean, they've been around, I get it, but the pace of them in the last 6 months has been unprecedented. You heard the numbers, you probably know by heart anyway, when we're coming in. I mean, my take as somebody who's been doing this for 26 years is, are there that many good companies? You found a good company, it sounds like, in Complex, but are there that many good companies out there to buy? Because if there were, why wouldn't we have had this before? What changed? Is it the pandemic? Is it the Fed policy?
I think it really was the pandemic. The pandemic shut down the public markets for a period of time, and that's when we did our first two SPACs. It was last May and last June, and then in August. And the pandemic made it possible to do Zoom calls, contact your investors, take it public, and then start finding companies and do your search. So, but I do worry that we have a lot.
I feel like if the government did create this, though, like they probably did create something they can't handle. And so now I'm getting a vibe that I should probably hold on to it until it gets a good pop. But I don't know. I hope it happens before noon because, oh, I'm getting impatient with all this garbage. I'm so ready for this whole market correction event to be done with. Let's get on with our lives.
I have it in my office studio right here, so shout out to all the cadets at West Point. I don't know if you guys can see that. Don't get two cadets on at the same time usually. There you go. Guys, thank you.
Thank you, Brian.
Thanks.
All right, love this thing. No, I still donate. All right, coming up, a big interview with a big name in global markets. I'm going to set this down. Why Guggenheim Scott Meyer says parts of the bond market are acting like a Trump fan. No, he's here exclusive. Thanks.
These days, we want sophisticated but simple. Cutting-edge, made user-friendly. In other words, we want hybrid. And so do retailers, which is why they're going hybrid with IBM. A hybrid cloud approach with Watson AI helps manage supply chains while predicting demands with ease. From retail to healthcare, businesses are going with a smarter hybrid cloud using the tools, platform, and expertise of IBM.
At some point in their life, 52% of all men will experience erectile dysfunction, but most of them never get treated. Now there's Roman, a digital health clinic for men. With Roman, you can get genuine medication prescribed by a U.S. licensed physician, all from the comfort of your home. If medication is right for you, Roman delivers it with free 2-day shipping and discreet packaging. Get started with a free online visit today at GetRoman.com/TV.
Mr. Wonderclear, it's hard for everyday people to get access to startup investments. But with Start Engine, you can choose between hundreds of startups to build your portfolio. It's your turn to become sharp. Visit startengine.com today.
You know that tech stock we talked about? I picked up 500 shares. You get it at a good price? Oh yeah.
Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 92% of orders and commission-free online trades.
Nice. GME still holding up. I haven't looked at it in like 30 minutes. That's how much I care right now. I know what's happening. AMC's still hanging around. They want the price to go down so bad so people will sell, but what they don't know is that they already did that and we didn't sell, and that's why I can't do it again. The fake that they have, the air inside the machine is all gassed out. So now it's real pressure. And no matter what they do, it just keeps hanging around.
The taper tantrum, the bond blow up, yield curve
Let's
madness.
go
Whatever you
right
want to call
now.
what happened last week, just don't call it insignificant. The sharp moving yield slammed stocks for a few days and got a lot of people suddenly very nervous about inflation risks and the markets in general, and with the possibility of nearly $2 trillion in stimulus coming onto already been what's put in, combined with what appears to be a pretty sharp economic recovery starting to take place in large parts of the country. Is inflation, maybe a sinking U.S. dollar, a real possibility? Joining us now for the Exchange exclusive is Scott Meyer, Chief Global Investment Officer at Guggenheim Partners. He has just put out a new paper moments ago called A Drunk Man in the Snow, and it's worth a definite read. Scott, we're pleased to have you on. Good to chat with you again. You write the foregone conclusion is that rates have bottomed out. They're going higher for years. That's that. You beg to differ. Tell us why and what you see happening.
Sure, Brian. I mean, first off, I got to tell you that I have heard so many times that we have reached the low in interest rates ever since the 1980s. Every down cycle is the end of the bull market. But the work that we've done that is based on the work of Eugene Fama for his work in securities prices and the follow a random walk, which is the drunk in the snow, is that we have yet to see a reversal in the trend that has been in place since the early 1980s. And so it has been a fool's game so far to every time we make a new low in rates to predict the end of the bull market. And until the market tells me something different, I'm not really in a hurry to join the crowd. And Brian, there's a lot of good reasons to believe that we haven't reached the end. One is the prospects that as the U.S. Treasury keeps spending all of its cash, it's driving interest rates lower, even though it's stimulating the economy, because as the cash gets into the economy, people are investing it in bonds and stocks. The other thing is, and I thought CNBC did an excellent story yesterday on this, is that there's now discussion about the idea of another Operation Twist, where the Federal Reserve, because interest rates are getting so low in the front end of the curve and could go negative, that they'll sell their short duration assets like Treasury bills and start buying longer maturity assets that would drive rates down.
And that's the part of the story I think that our audience may not get, because they think, oh, you're talking about getting a stimulus check and buying GameStop. That's not what you're saying. What you're saying is that surveys show a huge percentage of the stimulus is going to be saved or paid off debt. Even putting something into your checking or savings account is a government transaction in a sense, right? Very short-term T-bills. There is a financial knock-on effect, even from doing something as benign as that with the stimulus checks.
Well, that's right, and that's kind of what I get into in the paper is you've got to get into this arcane world of monetary policy. And how it all works for the Federal Reserve. So the U.S. Treasury keeps its checking account, if you will, with the Federal Reserve. When they spend money out of that account, it goes to the economy, and in this case,
Oh, that's sick.
largely in the form of checks to individuals. Well, our experience is showing us
Oh, I thought it would have been higher than that. I didn't know we seen it at 37 already. Because my gains was already at 10 grand before, so I don't know what's going on there. I thought it's a whole dollar higher. I guess not. Let's go then. Let's hit 40. I'm trying to think how Rocket could be a bad thing because, like, they're on TV sponsoring it, so there's got to be something bad about it. I mean, sure, they could trick some people into investing and, like, end up crashing this real quick and then get some money back, but it's just a small amount. Like, why would they create the risk of even something that can grow like this? I'm thinking there might be one pop, and I just let it go until one pop. fucking paper handed up rocket mortgage. Goddamn. I had 100 of these this morning. If I would have held on to all 100 of them and not cashed out, I would have freaking been at 60 grand right now. That's fine though. It went to a good cause. The GME needed it, so I didn't start crashing. All because of me. I held it up. But
the bond market, that thing definitely has its own unique views. By the way, you probably made a lot of potential home buyers or home refinancers happy. I want to read something from your paper, and by the way, it's very good. And tell us why we care. If you're not a financial professional, you're sort of around the margins of the market. This is meaning the money coming out of Treasury. This is causing MG supply to grow and soar at a rate of 25% over the past 12 months, more than 5 times the average annual growth rate going back to 1960. So there you got 60 plus years of history. But why do we care? What does that growth in money supply do? Things like equities and the dollar.
see this? What kind of bullshit is this? 36 is the highest strike they got. What about on this guy? 35. Like, you can't even buy an out of the money strike right now. What is that? That's crazy. That makes sense, I guess. I can't believe I cashed out 75% of that. I should have done 50. Amateur hour, fucking paper handed. Like, they can let this one pop because now that we're all in the money and no one can buy out of the money, they can't even lose that much. That looks like their new plan. They're just gonna never sell out of the money options again. That'd be interesting. Until I come along, I can open up that market. If you guys want to lose your money to me, I can outsell you. That's for sure, for sure. Oh my goodness. Let's go right now. Oh, nice. GME's all the way to its bottom dollar so far. Like, this morning it opened at like -4% or something stupid, but it rallied up to like a 10% gain and for a second, but like held 5% all day long. So it's probably a good sign. The more they bring it down means the more they're panicking. But when you see Riot and Tesla falling as well, like that just means everything else, they're holding it up. Like, these things should be at 0 right now, but because they're propping it up, they're only at -6%. Like, normally you're at -6% and it's like the sky is falling, so it's funny. But everyone acting like it's a normal day. It's not a normal day. They hold it at the 120 so all the paper handlers can give up their shares. Oh, that's what they're trying to do. Get people to sell GME and AMC and go into Rocket because they don't sell the out of money options. But like, people don't really know about options, so they'll just pick whatever they can find because they gotta, like, because it's up 48%, right? And so they're trying to get people to switch, but that's not gonna happen. Not. That does tell me I should sell and get more GME and AMC, huh? Let's see how much we got right now. Let's see here. We still got 10 more minutes. We said we wait till noon. We will wait till noon. But the more I think about it, the more I want to get into AMC and GME. Oh, GME's headed back. Let's go. Oh, man. It's amazing. It's so funny. The market's not like nearly as negative as it was, but the fact that they had to pump it so hard to make it go up 3% yesterday tells me that that was their last juice, and now everything's just hanging by your fingertips, and they ain't cats. So, guess what that means? It means they fall. 1, 2, 3. Let's go, Jamie. The American Movie Channel. Let's make a movie about this. Everyone keeps talking about how they're making movies about it already, and I'm like, shut up. The story hasn't even happened yet. Crazy people. They're acting like it's over and it hasn't even started. It's like lightning strikes, and they're like, it'll never strike again. We see lightning every year, fool. Oh, man.
كله حدا موصل لهم كلامه وهذا أسامة الكواسبي بضل يحكي مع حنا حنانية. 5 more minutes and we'll close this guy out. Because I'm hoping something crazy happens at the close of the market. Like, everything crashes and our thing goes up and it's game over. Wednesday morning, everyone finds out the truth. Like, or at least everyone understands how much money actually moved from one people's accounts to another. Although, I do think it is going to probably take 2 days to get the money. That's going to suck. Hopefully that we get at least a piece of it to start. If there were more out of the money options, I would have bought them. But there was not. Special margin maintenance requirement increase. That's always a good sign. Good thing I'm not shorting the freaking market. Oh, doggy. Only margins I get are because I move too much money in and out of the stock throughout the day. I don't know how to calculate that stupid margin call. But that one, like, all you gotta do is invest more money to meet the margin call, and then you go straight back to normal. You don't actually lose anything. Where the other margin call is because you lost too much money, they gotta close your account on you. 3 more minutes. Dang, did I save $40 at noon? I think I might have said that. Let's go, Dougie. I actually said before noon, didn't I? So that means we got 1 more minute. Let's go. That's funny. $40 is higher than it's been any time in the last 52 weeks. And it was just $20 3 days ago. That's freaking awesome. I got in at the perfect time. Alright, I'm ready to close this guy. Close. Let's just do $8. I'm good with that. That's 20 grand even. That's money in the bank, man. Send my girl some more money. Let's see what we got here. Orders. Let's watch them close, because they will. Boom. And that is how you make $15,000 in 1 hour. That's pretty sick. Maybe it's 2 hours. But if you count the $20,000 I made when made the trade right before market closed yesterday, or is $1,000 I made, $1,000 I placed, 20 I made. What is that, Dougie? $35,000 in the matter of six trading hours? That's pretty sweet. And then let's see here. I'll send my girl 10K, so that means I can buy 4,000 more of GME. Where you at, GME? Where you at? Ooh, you're down right now. You're slacking. Let me give you a boost. Need a boost to get through. Let's do 400. I want to see you get to 400, and I can do it $4,000 worth, which would be, oh, I don't know how to do math. Not even close. 30. Alright, I should have enough. Oh no. What are we talking about here? What the heck? Buying power. What's my cash power? Okay, I got 18,000 cash, but only a little bit of buying power? How much buying power? Get out of here with these margin calls. Alright, so I'm gonna have to call the bank about that. But until then, I can definitely buy 20 contracts. So that's what, 2,000 stocks if it hits and I can convert. Oh no, I don't even have that much. What the heck? That's some lame ass. But I have 20,000 cash. Alright. Well, I guess I don't get a double down. E-Trade blocking me out. It's okay. I hope you guys enjoyed that video.